Good morning. Morning, everyone. What a day we have today. Oh, man. Pre-market's looking good. Market ending yesterday looking good. Does that matter? Doesn't matter today. We have a couple things. One, we have Jerome Powell speaking today. Jerome Powell speaking today at 10 a.m. We're going to cover that. So stay tuned. That's going to happen in 30 minutes. So we're going to see that. What else do we have? I thought there was something else. Is there an index coming out or something? Is that CPI data? Is that coming out today? Maybe not. Is that this week? I think that's this week. Trying to find out. Well, what is up? Hold on, let me fix my camera real quick. Bang. Gotta make it look pretty. Okay. Okay, when is this coming out? Oh, and bank earnings. That's right. CPI data Wednesday. Oh, okay. So that's tomorrow. CPI is coming out on Wednesday, and then bank earnings is another time. Okay, whatever. So yeah, I guess the biggest thing is just the Jerome Powell hearing. So we're gonna watch that live together, and we'll cover what happens. This is gonna be really interesting. Basically, we're going to see exactly what his plan is to combat inflation, which, as we have been rumored, is 4 rate hikes this year. Not 3, but 4. We'll see if that's confirmed. I think it is. I think it will be, rather, but we'll find out. So we're going to cover that, which will be great. I think that'll just cover it. I mean, from 10 a.m. to probably 11 a.m. I can imagine it goes till. So we're going to cover that for majority of the stream. But I think it's going to be really interesting because we're going to have, senators upon senators questioning him, grilling him on, how is this going to work? What are your, what are the implications and so forth. Will this change anything? Probably not. Probably not. But we're going to see exactly what his thought process is, which is pretty cool. So we'll see how that goes. Here's what the market is doing. So I'm going to keep this, I'm going to keep flashing this on and off in the hearing just to see how the market's reacting to what he is saying. But you can see yesterday, I was really mad that I couldn't trade this yesterday because, this is obviously a great swing. It swung $9 from the low to the high, which is crazy. So I hope someone made money yesterday. Literally just get in at any point after 11 and you would have been fine. But so hopefully someone made money. But sadly, I couldn't trade because I did promise that it had to hit my trend line, which it did not. It did not. It didn't get down here, so I didn't trade it because I said on record that's what I had to do to trade it. So I couldn't. However, I really wanted to. I checked it when it was like around, or was it like here, I think, or maybe like here, somewhere around here. And yeah, it just looks so good. Like confirmation, dip down, all the way. Like it just was perfect. So I really wanted to trade it, but I'm a man of my word, so I didn't. But hopefully someone did. Literally, again, if you got in any time past 11, you probably made a ton of money. So hopefully someone made money. But then post market yesterday looking fantastic. Pre market today looking okay. You can obviously see some hesitation coming up with the Jerome Powell meeting. And then we have the market open in about 10 seconds. So we're going to cover that for the first 30 minutes and then see how Jerome Powell is going to treat the economy. Let's find out. But hopefully everyone is doing well this morning. If you have not yet, hit the like button for me. It really helps me out and helps your YouTube algorithm out a lot. Check the links in the description as well. If you're new here for some reason, you can check the Discord link, join it. It's free, and it's an entire community of traders here. And you can see every time I go live, every trade I make, yada, 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 all that. Cool. Let's see here. I can imagine we get rejected. I know I'm saying that post this red candle happening, but I think it's going to be a fight. But I do think it's going to get rejected just because of this pre-market history. You can see here it's getting rejected at the 50 over and over and over again. I don't think it's going to change, but we'll see. We will see. But yeah, everything in the pre-market tells me we're getting rejected at the 50. So yeah, we will see. But yeah, good morning, David. Good morning, everyone. Hope everyone's doing well. Again, hopefully someone made money yesterday. It was easy mode yesterday for the later half of the day. So hopefully someone made something. And yeah, you can see here we are getting rejected pretty hard. Let me see if there's any news on Webull. No news, just opinions. Okay, yeah, nothing crazy. Do we have any supports that we can point out? No real support. Not unless we get, down here. I guess like that's a support at 460-ish. 462 maybe. Yeah, it's hard to say. Nothing obvious. Nothing obvious. Morning, Dolphin. Always nice to see a dolphin here. Brighten our day. Okay, let's see what other stocks are doing. Okay, leading list is Lending Club, Pfizer, and that's kind of it. Eesh. Okay, what about the downside? Weird. Okay, so Pfizer's topping the list here, but Moderna's on the bottom of the list. Is there some kind of news I need to know about? Oh, you know what? It's coming off Euphoria from yesterday. Yesterday they got announced that they're gonna do they did or what is it, $18.5 billion this year is what they're gonna do in vaccines or something. But I think we're just coming off Euphoria. Usually when a euphoric day like this happens, it pulls back, it corrects. So this isn't that crazy. I'm sure at some time in the day it'll dip back up. So nothing crazy to see there. Rivian down there, Shopify, GameStop again. AMC, is AMC also down here? It is. Okay, meme stocks are not doing well. That's okay. Let's go back to SPY real quick. All right, we're trying to find a support somewhere. Let's see if we can. Let's check out crypto as well while we have some time. 41. Okay, so it obviously went under 40 as we saw on the stream together, but it is now over 41, which is kind of crazy. Let's go to the 4-hour chart and make this a little bit clearer. Yeah, look at that. Well, it's still struggling to, break over that 42 mark, which I have as a resistance, is 42.6. So we have a long way to go until it, breaches that. But it can still break down as well. I mean, I'm seeing a mini support here at 40. That's obviously like a psychological marker. And then we'll see if it breaks down lower. I have a feeling this is not over. I have a feeling we're going to go lower, actually. I don't think this is like the dip. I think we actually are going to go lower. Morning, Zachary. Nice to see everyone. Again, the game plan, if you're just coming in right now, is we're going to cover, SPY. Well, we're covering SPY the entire time. We're covering the S&P 500, seeing what's going on, but we're going to be covering the JPOW meeting most of the stream. It starts in 25 minutes. So we're going to be covering that pretty much, majority of the stream. After that is over, I'm going to get off as well, and then we will go on our days. Yeah, really interestingly as well, I'm dropping a video at the end of the stream so you guys can watch it about digital real estate. Super interesting stuff. I go not deep into it. It's more of a fundamental knowledge for now. I'll go deep into it later. Good morning, Rob. I'll go more deep into the details in a different video. This is more about foundational knowledge. If you have no idea what digital real estate is, if you have no idea what that word means, that's the video. Okay, just giving you a brief kind of overview, top down of like what this is. I'll get into the weeds later, but right now is just more about explaining the basics. So it's a really cool video. It's just me explaining it, nothing crazy, but still really good knowledge. And then you can see all the crazy projects right now, the things going for millions of dollars for digital parcels of land. Nuts. Crazy stuff. NFT marketplace is going absolutely insane. becoming a routine to tap into the stream, go to class. Fair enough. Fair enough. I also have my system here. I stream, and then immediately after I go to the dog park, I come back, I go to the gym. Like, it's a whole routine now, and I kind of like it. Like, I kind of like it. I love streaming for streaming, obviously, but I love streaming for the schedule it gives me. Like, I love having to get up. Like, I have to get up at whatever 6:45 every morning. Like, I have to do that, which sounds bad, but I love getting up early. I get up before the sun comes up, which, usually I would hate, but I love it. I honestly love it. Something about it just makes me feel like productive. It's good. Yeah, you can see here though, I'm not going to talk about it too much just because like we all are seeing the same thing. We're trying to find support here, but we are going lower lows. So we'll see if we can start breaking up. Maybe this is the start of that. We'll see. Tesla is well over 1,000 now at 1,060, which is nice to see a recovery. It was at 980 at the lowest yesterday. Whew. Man, it's crazy to see Tesla under 1,000 now, which is insane because like months ago it was like 600, right? Wild. You can see, wow, a ton of things more green. A ton of things just got green. Do you see this? Do you remember the list that was just like 4 things that were green like a minute ago? Look at that. Things are going wildly up now. Check it out. Wish topping the list. Snap, Pinterest, Peloton. Lending Club still up there. DocuSign. Looks like tech stocks, I guess you can call them. Kind of. Not really, though. Yeah, there's no specific sector here, but we can find out. Let's go to markets. Is there any sector shining? Okay, I guess diversified retail? Not really, though. Amazon is so big. That's funny. Okay, yeah, nothing crazy. Okay. Yeah, no real retail specifically, or no sector specifically coming out, which is interesting because S&P 500 isn't doing super well, but stocks, you know what probably is going on here is that these are not the S&P 500, right? These are probably stocks usually that are smaller cap, so we're probably not going to see it in the S&P 500. I guarantee, in fact, if we go to here, the NASDAQ, yep, is much higher than the S&P 500. Because again, the S&P 500 only includes the 500 biggest companies. So that's probably why we're not seeing the gains on the S&P 500 when we're seeing so many green companies, is because these are all smaller caps, right? And so they're probably not influencing, which is really cool to understand. It's not good for us, but it's cool to understand that like if all the small caps just went up 20%, we wouldn't feel that, which is kind of interesting. It's kind of interesting. The big caps, those are the ones that we need to see, like Apple, Amazon, Facebook, Google, all those. Those are influenced to us, right? But these smaller ones, not so much. Not so much. What's been, oh wait. Sure, let's look at Wish. Wish has been beaten down, and it still is. I still would never get into this until it starts confirming that we're making new highs. Because it's just been, oh my God, for how long? Oh my goodness gracious. For the last year, almost to the date, the last year has just been absolutely rejected over and over and over and over again. Not good. That's not good. Poor Wish. Okay, SPY still making lower lows. See, there's a shelf, we'll call it, right? There's the first one. Here's the second one. You can see it's just going lower and lower and lower, right? You can see that. Oops. Get out of here. Yeah. I'll probably talk more about like fundamental stuff, just like charting, that kind of thing, while we're waiting for, we got 20 minutes to wait. So yeah, you can see here lower lows, right? Hit here, went down, hit here, going down, maybe less, right? And so you're kind of seeing that lower lows and lower highs. Obviously it's descending. That's not very hard to see. You can already start drawing trend lines, like that, right? We're only 10 minutes in the market, but you can already start drawing your trend lines if you really need to. It's good to get in the habit of this kind of stuff, drawing trend lines, right? Sticking to fundamentals, seeing those charting principles, just to see what's happening. Simple as that. Just to see what's happening. Yeah, overall, it's not looking great anymore. I mean, look, we're almost coming off in the 5 minute chart. We broke below the 200 already, right? Like we got room to fall. I think that's what's question. That's what everyone's question is right here. Is that, you know, can it get worse? Can this even get worse? It's like, well, absolutely. Like this thing can still drop 100%. Like we still have this trend line, right? Like if JPOW meeting goes that terribly, I don't have any disbelief in that this thing could drop all the way to the trend line. It absolutely could. So like, things are delicate right now. Things are delicate in the market. Oops. Yeah, something like that. But yeah, it's a very delicate situation we have today. And we're going to see what happens with this meeting. I really hope JPOW does a decent job, but I don't know. Usually doesn't. Every time he talks, usually it goes really badly. Usually. The only thing of one time when the Federal Reserve was on camera and it went well was with the tapering. That was the one time I've ever seen it. When the tapering got confirmed, that's when the market went nuts and it went up like 2% in a day or something nuts like that. But that's the only time I've ever seen it. Every other time I've seen them go live, it does not go well. Does not go well. The market hates them. Janet Yellen and Jay Powell they do not bode well with traders, let me tell you. I was watching someone's video yesterday, or someone's video saying we still have to fill the gap. It was almost filled yesterday, but then it shot back up. Said it was a bull trap. And yeah, and then we see it go back down to support. Absolutely could happen. Yeah, I can see the same thing. I can definitely see the same thing. What he's saying here is take a look. We zoom out, right? So if this gap down just like that, we still have to fill gap. It almost did it, right? It almost did it. Like we were not that far away, right? Like we went to, hold on. Like we got to here at the end of the day, right? Which is massive. We needed to go a little bit higher, but we were almost there. But yeah, what they were saying is a bull trap is looking like that, and sure enough, like peaked over, went right back down. Something like this. Like it almost filled completely. Almost. But then got rejected completely, and now we're all the way back down. And yeah, I wasn't very optimistic about this because, again, we're waiting on bad news. We're waiting on bad news, which is not a good place to be in. All right, so we have so many things happening. We have JPOW meeting today, which again, we're covering in 15 minutes. And then we have CPI data coming out tomorrow, which I can't imagine is getting better. I really can't imagine that. It was at like 6.8% or something, or 7.1% last time. So I mean, imagine if it's like 7.4%, right? If it just gets worse, right? Like the market's not going to like that. So of course people are going to start selling. Like again, so it's like today and tomorrow might not be the best days. It just might be beaten down again. And if it does, like of course it's going to come down here. Like of course it is, right? Like we can almost count on that. So again, you got to play it however you want. If that means throwing puts on there or waiting and then doing calls at the bottom, whatever it may be for you. There's many ways here. Like a ton of money can be made here, 100%. So, yeah. But we'll see what happens. We'll see what happens. Maybe the JPOW meeting goes well. Maybe. Maybe he says all the right things. Yeah, you never know. All right, I'm going to give him benefit of the doubt. 99% of the time, it doesn't go well for the market, but I'm going to give him benefit of the doubt. Maybe today, maybe he does well. It's possible. It's all possible. We're going to keep an eye on this. We're going to keep an eye on crypto because people usually use crypto as kind of like how do I say it? Like escape route. You know what I mean? Like as soon as the market sells off, usually crypto sees a little bit of a bump because like people just literally just like take their money and move it to crypto. So I kind of want to take an eye on crypto as well. So we're going to do that. But mostly we're looking at SPY and we're going to look at the NASDAQ as well with like TQQQ. Yeah, we'll look at both of these. Actually, oh, I just realized I'm not following it. Interesting. There we go. So we're going to look at TQQQ, and SPY throughout the meeting, seeing what's going on. Let me try to get the link as well. So JPOW meeting, watch live. That's a broken link. Well, I'm sure there's like a YouTube channel showing this. I'm sure, right? Gotta be. Jerome Powell stream. Hold on 1 second for me. Yep, there we go. Beautiful. Okay, 14 minutes. Okay. Yeah, on the FTM, I've been trading recently. Wedge, hoping the meeting can spur a bump in crypto. It's possible. That's the one cool thing about it is that there's all these different avenues for investing, right? And crypto is just one of them. And people use it as a hedge against the stock market, which is not, I don't know if that's like the best thing to do, but it's cool, right? That people do that. So I do think if this goes badly, crypto might see a bump, which is kind of interesting. Not in a trade yet. Again, I'm waiting for the bad news of Jerome Powell here. That's what I'm waiting on. That's what I'm waiting on. I recommend you guys do it too. If you want to take the bet and say like it's gonna go bad, so I'm gonna do puts, have fun. Like go for it. No 10 a.m. reversal. It's more about 10 a.m. Jerome Powell. So I don't know what's gonna happen. It really depends on the meeting, and we're gonna cover that. It's all happening within the stream. Yeah, there's no PDT with crypto, which is awesome. You can buy and trade it forever. You can do it 100 times a day, 1,000 times a day if you want to. It doesn't matter. You might run out of money, but it doesn't matter. What was I just saying? Yeah, so crypto is kind of interesting because I do think if the market goes down, usually weirdly, crypto goes up. Crypto goes up. It's a strange hedge. It's a strange hedge. I don't think it's the correct thing to do, but people do it. Millionaires do it. So who am I to say? And looks like this trend line is holding true so far, staying right under it. And yeah, it's not looking good. Again, I don't think sentiment's very high to buy here, especially big caps. I think that's why we're seeing smaller caps kind of go crazy right now, is because I don't think the big caps are the way to go. People don't want to bet on that, especially when it comes to, rate hikes. Like I don't think they want to see big or like corporations deal with that. So they're kind of going into smaller. So like Peloton, right, Wish, DocuSign, a little bit smaller companies to kind of, again, it's all a big hedge against JPOW. That's pretty much what we're seeing. Very much what we're seeing. Again, this is a pretty interesting day if you think about it. Like, yeah, it's not good, right? We're going down completely. We're down 0.6% on the S&P 500, and it's going to continuously go down. But it's kind of interesting to see that, look at all these stocks that are green. Like my list is 50-50, green to red. However, all indices are down. It's kind of interesting to see that because, again, it's all smaller caps. All smaller caps. There are bigger caps like, let me see if I can find one. Huh. Is there any big caps here? Well, PayPal, I guess. But even then, that's pretty negligible. Any big ones? I'm looking for like Amazon. Oh, there's Amazon. Oh, 0.13, negligible. Yeah, crazy. Most of these are very small caps compared to like, blue chips. So this is really interesting to see that all small caps are doing really well all of a sudden. And look at the big caps. Yeah, wow, that's super interesting. Like, where's Apple at? See if I can spot it. Oh, I see it. Okay, negative 0.6, nothing crazy. What about Meta? Negative 0.2, nothing crazy. Okay, yeah. Not as dramatic as I'd like it to be, but the point still stands. Smaller caps are kind of, the winners today. For now. We'll see how the meeting goes, but for now, small caps are kind of the winners. Hopefully you guys are also into stocks. I hope no one's just trading options. I know I'm doing that currently, but that's because I'm doing it for educational purposes. Hopefully you guys are also trading like real stocks as well. I hope so. It's good practice. It's really good practice. Matterport finally. Oh, never mind. Not really, but it is up, which feels good. What is this? Oh, it's a support. Okay. So yeah, looks like this has to break above 1764 and then it's looking good, but it's been consolidating for a while, so we'll see. Yeah, really interesting day. Really interesting. IWM is going down. The Russell, yeah. Yep. Well, everything's going down, right? All indices are going down. Like if we go back to markets here, oh, NASDAQ is actually nasty going down now. Wow, that was a big change all of a sudden. But yeah, everything, all indices are down. That's not super surprising. Again, sentiment's not high to buy here. Sentiment is not high. Because again, everyone's waiting for JPOW, everyone's waiting for CPI data, like everyone's waiting for bad news. So would you buy if you're waiting for bad news? Like probably not, right? Probably not. But yeah, that's the sad news. We got 9 minutes until JPOW meeting, so yeah. Neo's been a pain. All the banks have such a high price target, but it continues to get beat up. Neo is so interesting. Oh, are we breaking above? Perhaps. We'll come back to it to find out. Neo's really, that's not Neo. What? Neo's been really interesting because it's like not getting the love that all the other EVs got. Like EVs went crazy around this era right here, and this one did too. Don't get me wrong, it did go crazy. Like you can see here at the low from the high, it went up 80%, which sounds like a lot, which it is. But the other EVs went way more wild, right? Rivian went crazy. Tesla, obviously, Lucid, they all went nuts. And then Neo did not get the love. Not really. It kind of was just like grouped in, but it really no one was like singling it out. And it's been rejected ever since. You can see here we're descending channel trading very clearly, like almost textbook. And yeah, again, it's just always happening. And so Neo kind of sucks. Like I'll be honest, I would never invest in Neo just because of this price history. Unless they come out with news that's amazing. But I've seen nothing. I've seen nothing. Buy broke above, beautiful. Nice. That's cool. Again, I'm not really gonna discount or account anything until the Powell meeting, but this is cool price action happening. I'll get rid of this. We got 7.5 minutes, guys, until the meeting. If you're just getting in here, remember to hit the like button. It's going to be a very interesting day. We'll see how JPOW is under pressure, getting questioned by all of the senators. He's probably going to be fine. He's usually pretty cool. But I think his decision making is lackluster. Definitely lackluster. No one likes it. Do I care about the rate hikes? Not really. Personally, I don't think it's going to affect me. But it affects huge billion-dollar corporations and banks. So that's who's being affected. And those are the people that are moving the market. So it's out of my hands, sadly. But yeah, remember to hit the like button, and we're going to get going on this Jerome Powell meeting in 6 minutes or so. So yeah. A time period for the challenge? Yeah, I said 3 months, like that by the end of March was my goal. But I don't know, with this kind of market now, I'm not sure. And the fact that I have to do it on stream, because here's the thing, like I would love to have traded the last 3 days, but everything interesting happens after my stream. This is all after my stream, right? Same thing here. This is the stream. This is all after the stream. All after the stream. Same thing here. All after, right? So it's like I want to trade it, but I want to do it on stream to be educational, but that means I can't do good trades. So I don't know. Like I want to do 3 months, but it's gonna probably take a lot longer if I can't trade it. Kind of sucks. We're talking about Neo. Their new car has the longest range battery, longer than Tesla's. And they're the only company that offers battery swapping stations. Ooh, with plans to extend to Europe. That is good news. Don't get me wrong, that is good news. I guess I just haven't heard it because maybe their marketing is just terrible, but I have not heard it. I could extend the stream, but like how long, right? Like, because even if I wanted to trade this, right? I mean, that means I'd have to be live for another hour, almost another hour. I can't do that. You know what I mean? Like, I can't have 2.5, 3 hour streams every day. Like, I can't do that. So I have to do it within the first like hour and a half at most. or do it after 10:30. I could do that, but I kind of like having market open. Like I think this is the most interesting time in my opinion. All the news usually comes out within the first 30 minutes to an hour. Like there's so much to cover right off the bat that I kind of like that. I could stream at 10:30, but I don't know. I don't know. Usually the market slows down at that time. Like velocity slows. I don't know. I'm not sure. Yeah, SPY is very painful right now. I'll figure it out. I could just trade after the stream ends. I could just do that. Well, thanks, Jamie. I could do that, but I don't know. Like if I just say on Discord that I'm trading currently, that doesn't make I don't know. It doesn't make me feel good doing that because let us know when you take the trades through Discord and why. Maybe showing pictures. Yeah, I could do that, but like yeah, thank you. I can send alerts, but again, the good thing about it is you're seeing my reaction in real time. I think when I see like I'm in some Discords as well, and I see people do trades and they just like post it. I mean that's fine. It's not the worst thing, but I kind of like seeing it live, like right in front of my face and seeing their like reaction and thought process and so forth. If you just see a Discord message, hey, I'm in this right now, this contract at this expiration, and then like 20 minutes later, it's like, okay, I'm out. It's like what does that tell you exactly? Like, what did you actually learn? Like, not much, I would say, right? Like, you just saw me get in and get out, but like, why did I do that, right? Like, there's so much more learning that goes involved than just sending an alert. I kind of don't like that. But that is the best way to go because it makes the challenge a lot quicker. So I'm in a bubble of do I make it educational purely, right? And that means a lot less trading on stream probably because again, we've just been kind of hammered. Or do I make it about the challenge specifically? So do I make it educational or do I finish the challenge as quick as possible? That's kind of the dichotomy of what I'm in right now. And I don't care that I'm not trading. Like it's just a challenge. Like for me, this is just like fun, right? This isn't my livelihood. Like I'm doing it because like I want to show you guys education, right? I want to show you guys exactly what I'm thinking, why this is a good trade, why I'm getting in right now. Like that's what I want to do. I don't care that I make $5,000. Like that's not the point of the challenge, right? The point of the challenge is to show you guys this singular trading strategy and, you know, showing you what that looks like, right? Because it can only help you when you have more strategies to go off of in the stock market, right? And again, that's all it is just showing you that there's different ways to use the stock market and leverage it to make money. You don't have to just stick into long-term stocks. There's different ways to go. So, I mean, that's kind of what I'm in is like it has to be one or the other. It can't really be both because again, like if I was a smart trader, I would absolutely have traded yesterday. Like this is so easy money. So easy money, right? But I couldn't do that because I wasn't streaming. So anyway, a long rant, but that's where I'm at. I do have a Discord as well. Check the link in the description. It's absolutely free to join, of course, and you can just get in there. It'll get better. I think so too. That's why I'm not like rushing into it. Yeah. It's in the link, Jamie. Or it's in the link. It's in the description. Go check it out. Education gets my vote. Beautiful. Sky's brands. Here for the education. Yeah, exactly. So many people would have 3 to 4 strats by now. Yeah. So yeah, I think most of you are on the same page that I'm at, that like it's not about the challenge, right? I'm saying like obviously the title of the stream is about the challenge, and that's to get people in here, but it's not really about the challenge specifically. It's about education. It's about how like what makes a good trade. Why are you getting in right now? That's what it's about. That's what this is about. So I'm okay not trading most of the time because again, I want to make sure you guys are seeing what a good trade even looks like. And right now, this isn't a good trade. I would not buy calls here because we have a meeting in 1 minute, right? And I'm saying this every stream on why I'm not in a trade currently and why I'm waiting and what I'm looking for exactly. That's why I said yesterday, I'm waiting for this trend line to hit. If it hits this trend line, then I'm in, right? That's what I said. You have to see all these ideas. You have to make these checkboxes for yourself, and it has to hit every single checkbox. And if it doesn't, you don't trade. It's simple as that. Don't get in because you feel like you're missing out. It's the worst thing to do. You're gonna absolutely lose money. If you saw yesterday's stream, there was a beautiful moment where it was like, you know, it was looking good right here, right? Actually, let's go to the 1 minute just to show you guys in real time what was happening, right? So we saw this, right? Pretend like the the future hasn't happened yet. We saw this and someone was like, "Oh, should we get in here?" And I was like, "No, don't do it because check it out. Like we got to wait for confirmation, right? Confirmation is such an important principle." And then sure enough, look what happened. They got rejected, and they got rejected, and they got rejected, right? Like you got to wait for that. So I mean, there's all these really teachable perfect moments in the stream and that's what it's about, right? That's what it's about. Teachable moments, not just me making money. That's super secondary, tertiary maybe. Like it's really not a big deal to me if I make money or not. It's more about learning why you should trade and why you shouldn't trade. More importantly, okay, Jerome Powell meeting's happening. Okay, cool. We'll cover this. We'll go to this. Bang, bang. But anyway, so that's where I'm at. I think I'm going to keep it more educational than anything. Like, obviously, I just want to make you guys have 100% better trades, not watch me make money. That's not what it's about. What would have been a confirmation? Higher highs and higher lows. That's confirmation. What does that look like? I'll show you. So this is today, right? This is happening right now. So as you can see, it's lower lows. What do I mean by that? Look here, right? It dipped and went higher. That's a higher, that's sorry. That's a lower high. You can see one high here, one high here. That's a lower high, right? Not confirmation. And then we dipped again. Lower low, right? Here's the one low, here's the second low. And we keep going lower and we keep going lower. What are we waiting for? Higher highs, right? So this, the next high has to beat this. The next high has to beat this. And the next low has to stay above this, right? So if I draw it, oops. So that's what we're waiting on. The next cycle, whatever it is, right now we're in a sell cycle as it looks like. If it dips down, we have to stay above this mark. And if it goes up, we have to be above this mark. That's confirmation that, hey, we're indicating we're going higher. That's indication. And then we have to continually do that and keep step staring up, right? That's confirmation. Don't just do this right now. There's zero confirmation that we're reversing. None. There's nothing. There's nothing. There's fortune telling, right? There's gambling that we will go up, but there's zero confirmation. There's none, right? So don't trade it. So don't trade it. Simple as that, right? And then I'll show you as you know when the hearing happens what's going on here. We'll wait for confirmation, wait for these reversals, dips. I'll show it all. But right now, again, there's no confirmation that we're actually heading higher and higher. It looks good. It looks good, but there's no confirmation. So what would confirmation look like is within the next couple candles here, maybe we break above, right? That'd be interesting. Like maybe right now, even. That'd be cool. Well, we'll see. Okay. Oops, why are you buffering? Hearing on the nomination, blah, 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 nothing. They disabled chat. What's the point? They disabled the chat. I like seeing the funny comments. I'm a fan of seeing the funny comments when anything like financially political happens. I'm a huge fan. It's super funny. This one doesn't look great. Oh yeah, let's try another stream. I mean, I guess this is the one though. Most people are watching this one. Okay, we'll just wait. They like to take their sweet time. Usually it never begins on time. Usually it's like 10 to 15 minutes after, so it happens. Jamie thinks we're going down to 450. Very much possible. Desire recipients receive 5.9% boost to COLA first time raise since 1982. Wow. $4.97 the past week. Yeah, I know because I can't trade off stream. All the best trades happen after the stream. I'm telling you, it's sad. Watching CMC, streaming to S. Did they? Did I go to a different stream?
economy that works for everyone, not
There we
just
go.
wealthy elites.
That's this
That
guy
is
again.
what we're delivering. Think of where this country was a year ago.
Sounds like a
Domestic
smoker.
terrorists breached this building a year and a week ago, and
The video
assaulted our
quality is terrible.
democracy. 4 million more people were out of a job. The hope of vaccines for everyone was just that, a hope.
Exactly. So
Today
this
we
is a
have
new
made
high.
much progress. We have a president committed
This
to
is great
democracy,
confirmation,
willing to
right?
stand in the breach.
Or sorry,
as he put it
indication,
last
not
week.
confirmation, indication.
Vaccines
right?
and booster
Hey,
shots
we're
have
making a new
dramatically
high.
lowered the
Great.
risk
That's
for
great.
most people, allowed Americans to go back to work,
Let's see
and
where
our children
how
to go
high this
back to
goes first,
school
and
safely.
let's see what this
We
dip
added
looks like.
6.4
Because if this
million
happens,
jobs last
if we
year.
dip lower, it doesn't matter,
6.4
right?
million
Nothing mattered
jobs,
there.
the most since 1939. The nomination
Looks
we
great so
consider
far, though.
today represents another step in President Biden's efforts to rebuild our economy. The president is putting results over partisanship, evidenced by the gentleman sitting at the table, renominating a Federal Reserve chair of the other political party. Jerome Powell served as chair of the Federal Reserve since 2018. He joined the Fed in 2012. He served the country before that in a number of different roles, Undersecretary for Finance at the Treasury Department during the George H.W. Bush administration. As chair, together with President Biden, he helped us deliver historic economic progress. We passed the American Rescue Plan, putting shots in arms and money in pockets. The unemployment rate dropped to 3.9%, down from 6.7% when President Biden raised his right hand. In December alone, we added 800,000 jobs, more than doubling economists' expectations. The economy's regained 84% of the jobs we lost since the pandemic hit 2 years ago. And for some of my colleagues who like to measure the strength of the economy only by the stock market, it was up 20% at the end of 2021. It last year hit record highs 70
Looking good so far,
times.
but Jerome Powell has yet
Passed
to
an
speak.
historic
So
jobs
let's
bill, the
wait.
bipartisan infrastructure package, a goal that presidents
Looking
for
good.
decades, presidents of both parties, failed to reach. Chair Powell, along with Vice Chair nominee Lael Brainerd, whom we'll hear from later this week, led the Federal Reserve's unprecedented actions to stabilize our economy in the face of a global pandemic. To his credit, Chair Powell recognized the importance of full employment and what that means for all workers, particularly those at the margins of our economy. He held firm against attempts to politicize the Fed and prevented an economic downturn from becoming far, far worse. He understands the best way to bounce back from this crisis is to get the coronavirus under control with vaccines. Today, we're at a critical moment. For the first time in decades, workers are finally starting to get a little bit more bargaining power. Wages are growing faster than inflation, faster than we've seen in over a decade. Americans are leaving jobs that didn't work for them and their families. They're finding better ones, often with higher paychecks.
All right, let's make some predictions.
Corporations call this, quote, a labor shortage. To me, it looks like the free labor market at work at its best. Of course, we still have challenges. We've seen severe supply chain disruptions caused by the pandemic because for decades, corporations put short-term profits over long-term resilience, lobbying this body for what turned out to be bad trade agreements and bad tax policy. The fragile supply chains stretching all over the globe are not easily fixed. These disruptions, along with corporate opportunism, are raising the cost of many consumer goods. That adds to the costs that have been growing more unaffordable for decades, from child care to prescription drugs to housing. While paychecks are starting to go up, wages are still far from keeping up with corporate profits.
That'd be a huge drop if it happened.
American workers,
that'd be a huge drop. That'd be $9.
Reorienting our economy from Wall Street to Main Street. Some are suggesting, though, that the Fed pull back on the support of the broader economy and make it harder for people to get jobs. That's
calls?
That's generally what
I mean,
happens.
we'll see how this meeting goes.
Economist
I'm not doing
lingo
anything until I
tends
hear
to
exactly what his
mask
plan is,
what
because
we're really
apparently
talking
nothing's
about when it
confirmed.
comes to the Fed's work. So let's be clear. President Biden put it pretty well last week. Taking the example of the price of cars, he said we have two options. We can increase the supply of cars by making more of them, or we can reduce demand for cars by making Americans poorer. That's the choice we face. When people talk about cooling off the economy, what they really mean is making
it did move that much yesterday
to find jobs and stopping paychecks from growing.
It happened on the way up, right?
Cooling off never seems
Panther
to
has a good
extend to
point.
corporate profits.
This happened yesterday.
Pay.
It moved
The
up
Fed
$9.
must not
Who's to
allow
say it can't move
only
down
Wall Street
$9?
to recover while
Very
working
much can.
Americans are left behind. We've seen
Very
that
much can.
story unfold far, far too many times before. Today, banks are quietly
We'll see.
celebrating one of their most
Cast your
profitable
vote.
years
Looks like
ever,
we're pretty
with
split.
huge bonuses and payouts. The Fed
Looks like
must do more
exactly
to stop
50-50.
consolidation in the banking industry from hurting consumers and small businesses. It
Low
must
volume because
encourage
people are
more
waiting.
lending to
People are
Main Street
waiting
and
to
crack
see
down
exactly
on stock
what's
buybacks
happening.
and
Right?
risky bets
For
at
sure,
the
people are
biggest
just waiting
banks.
to see.
And the Fed needs to take seriously the systemic risks that threaten our economic progress, like cryptocurrencies and stablecoins, and most importantly, climate change. Chair Powell's shown he understands, in his words, profound challenges for the global economy and financial system, unquote. If confirmed, we expect him to take what he's promised will be bold steps to tackle these risks. Chair Powell, Vice Chair nominee Brainerd have also begun important work with the FDIC and the OCC to update the Community Reinvestment Act.
Do you guys think most senators are for crypto or no?
Bank service to and investment in all the communities that have
Do you
been
think
left
most of them are for it or against
we
it?
expect,
Or
also
probably
expect
just don't
reform
understand
inside
at all
the Federal Reserve
and don't
system.
care.
Means increasing diversity at the Fed so that people making
Hey,
decisions
88
for our
bucks. Well
economy
done.
actually
Waiting for the next trade.
reflect the
Beautiful.
workers who power that economy. It's something the Fed's entire history
Against,
has
most don't know what
been,
it is.
frankly,
Probably
shameful
both are
about.
accurate.
As Chair
I think they're
Powell
against
said,
it because they don't know what it
entrenched
is. You know what I mean?
inequities prevent some Americans from participating fully in our labor
True.
markets. Not only will they be held back from opportunities, but our economy overall will.
Well, I remember, do you guys remember the other meeting that we covered, the crypto meeting? And then they're all like, I don't know. They asked like such weird questions. Like it was like questions that like your grandma would ask if you're trying to explain crypto. You know what I mean? You're like, no, like no. You're not thinking correctly. Like you don't get it. Like I remember a ton of those questions came out. It was just like, I don't understand where your head's at. I don't think you understand.
On how we want our economy to work. We can't have a Fed that returns to business as usual because, frankly, that just didn't work for most Americans. Chair Powell, President
For you organized crime. Guys, I don't know if you guys know this, but I had a video that came out about crypto, but the IRS seized $3.4 billion in crypto-related fraudulency last year. 3.4 billion. That was 90% of the fraudulent money in total last year. 90% of the total fraudulent money IRS seized was crypto-related crime.
Thank you, Mr.
Crypto, because it's so scammy. I mean, it's the Wild West. There's no regulation on it, so it's so easy. Most don't know what to do it. Ethereum to pay, using Ethereum to pay. Okay. Interesting.
For Chairman Powell's renomination
Huh.
because he has a
They have a
record
position
of
will be
acting
against.
thoughtfully and
Yep.
constructively, especially
100%.
in some very
If they're
difficult
alliances with the
circumstances.
banks, of course
First, he
they
did
hate it.
implement a number of modest, sensible reforms that reduced regulatory burdens,
God,
including
to
on
me
small
again.
banks, and helped to encourage
This guy.
economic growth. Second, when the pandemic hit nearly 2 years ago and governments
You know, if a guy
worldwide
got
began
scammed
to
out
shut
of
down
1
their economies,
million
credit markets
on
seized
Twitter,
up,
$1 million,
and the economy teetered
or is it
on the
1 million
brink
of a bad coin?
collapse. But with Congress's help, Chairman Powell acted swiftly and appropriately to stabilize the financial markets and the economy.
That's why she
To his
was
critics
down.
who
Of
claim
course,
that the
that's
regulatory
exactly why she was
reforms
down,
that
is
he
because no one
spearheaded would
cares.
hasten the collapse of the banking
Because
system,
it's
we
a
now
pump
know
and
that's
dump. It's a
clearly
hype coin.
empirically false. After the pandemic caused the economy to nearly collapse, our country
Dollars?
emerged with the
Well,
most
how do you do that?
well-capitalized banks in history. It was and still is abundantly
million?
clear that those regulatory
Oh, the
reforms did not
influencer
come at
scam?
the
Yeah, that
expense
happens
of
all the
financial
time.
stability.
Guys,
Of
if
course,
you
none of the
ever
Fed's
get a
pandemic
direct
actions
message
came
or
without a
anything
cause.
on
This
social
negative
media
real
saying,
interest rate
hey,
environment
you
continues
know,
to
or
distort
maybe it's a
markets,
giveaway,
risk asset
right? We're giving away
bubbles
10
and punish
Ethereum.
savers.
Congratulations, you
And the
won,
Fed has
whatever. If
dramatically
it's too
expanded
good to
its
be
balance
true,
sheet with trillions of dollars
right?
in government
Or if
bonds,
if
effectively
anyone that you
monetizing a
don't
lot of
know,
debt
or anyone that
and
you do know,
facilitating
asks
profligate
for your
government spending.
wallet,
For the past
don't give
18
it to
months,
them.
I cautioned
That
the
should
Fed
be
was
obvious,
fighting the last war,
right?
a mystery
That should be
pathogen
obvious.
that led governments to collectively shut down the global
Like, come
economy
on.
when in fact a new
Don't
enemy
ever
arrived.
give your wallet
That was inflation.
to anyone.
I'm relieved
Just
the Fed
don't
has
do it.
acknowledged
Like, save
inflation
yourself
is
the
running
trauma.
well above and longer than its initial projections. In response, the Fed has accelerated the termination of its bond buying program, and FOMC participants appear to be accelerating the process to normalize interest rates.
BitBoy?
These are welcome
Oh, is that like
developments.
the influencer?
But I do remain concerned with the Fed's actions
Yeah, fair
going
enough.
forward. First, I
Well,
worry
I mean,
that the
I
Fed's
I hate to say
extraordinary
it, but like,
response
don't.
to the
I mean,
crisis
you're
could
kind of
become
dumb
the
if you
new
give away your
normal
wallet to
for
someone.
monetary policy.
To be completely honest,
We're more than a year
I don't
into
care how
a
good
record
the
economic
opportunity seems.
expansion,
Don't ever
with
give your wallet
unemployment
away.
at near
There's no
all-time
point,
lows.
especially when you have
And yet the
millions of
Fed
dollars
is
in it.
still
Why would you do
today
that?
buying government and agency securities. Having continued QE throughout the
SHIB,
recovery was, in my view,
follow
a
through,
mistake.
supposed
It's
building new
contributed to
blockchain
asset
NFT
bubbles,
marketplace.
distorted
Yep, heard
markets,
that.
and a suboptimal allocation of capital,
This
credit,
needs
and
major burns,
resources,
among other
all of
things, to
which
really
ultimately
move.
lead
Very true.
to lower
Very
economic
true.
growth.
I've heard of SHIB doing
Second, I
some
worry that
moves,
the Fed's
but
new
I
monetary
don't know if
policy
people are with them
framework
yet. That's the thing.
has
Like, I'll
contributed
look
to
at it
the
right
Fed
now,
being
but
behind the curve, as we're seeing
don't remember
inflation running
them.
at a 39-year high.
Shiba Inu.
Under this new framework,
Still,
the Fed
oh my God, it's
intentionally
27,
tolerates
24 now.
above target inflation for an
Oh my
indeterminate
goodness
period
gracious.
of time. Under
Things
the
getting
old approach, the
crushed.
Fed may have acted last
Same thing with
April when we
Doge.
first passed a 4% inflation rate.
Dude, I'm looking
We
at.
haven't seen that in some time.
That's Shiba Inu right
Beyond
now. Absolutely
monetary
getting
policy, I'm
destroyed.
deeply
Doge.
concerned to see the Fed, especially at the
thing, not
regional
doing well.
banks, wade into politically
I don't
charged
know, man.
areas
I don't
like
trust these
global
coins
warming and so-called racial justice.
because they don't have any real world
Regional banks have hosted
application.
multiple
At least
symposia
Bitcoin gets
on these
transferred.
issues
At least
that
ADA gets transferred.
consistently
At least
embrace and
Ethereum gets
advance a
transferred, right?
particular
At least there's
liberal
some kind of
political
currency
agenda.
actually
And the Fed
behind it.
itself joined the network
I don't know who's
of
trading
central banks and
Dogecoin.
supervisors
Like, I don't know
for
the
greening
real
the
world
financial
application
system.
of this. I mean, there
The
is none,
network's
right? That's
stated
why it's a
aim
hype
is
coin.
to use financial regulation to, and I quote,
you know,
mobilize mainstream finance to support the transition toward a sustainable
SPY
economy, end quote.
is coming back down.
In other words, to direct
See if
credit
it
away
sticks to
from the
this
fossil
50
fuel
or not,
sector.
but maybe.
The troubling politicization of the Fed puts its independence and effectiveness at risk. The Fed has been granted operational
Every weekend
independence to
scammers
protect
take
monetary
ADA founder
policy
and
from
put live
short-sighted
overlays and
political
claim you get
interests.
touched.
And in turn, the Fed has operated
Stupid.
largely apolitically to great effect.
Doge
Kind of
games.
bargain here. The Fed is given independence
That's a
on
good
the
point.
assumption it will only engage in
What
areas
if
in
that
which
was
it
the
has a mandate.
funniest news,
makes
crypto-related
sense.
news I've heard in so
But if the
long
Fed
ago.
is
I was
going
like,
to stray
AMC,
from
we're
its
accepting
mandate and become a
Dogecoin. You're like,
political
what?
actor advocating a certain set of social policy, then there's no way it's going to maintain
The two
its
memes are getting
independence
together?
from the political branches of government that are actually responsible for those topics. The Fed does not have a mandate to advance politically charged causes that are irrelevant to its mandate, like global warming or advancing so-called racial justice. And to make matters worse, when I've sought to understand these developments at the regional banks, I've been met with unacceptable noncompliance with reasonable requests. So let me be clear. If this politicization continues unchecked, it will not end well for the Fed or for independently driven
What is
monetary
this? I feel like I've heard
policy.
this before. What
As
company
the
is
Fed's
this?
leader, I hope you take this seriously and rein it in
What do they do?
to protect the Fed's legitimacy and independence. Now, I've observed that the Fed has had the good sense to adjust its behavior as the facts and circumstances regarding inflation have come in differently than were expected.
Rockstar Games,
Unfortunately,
2K.
we've seen no such humility or recognition of reality from the Biden administration
Are they a
or
game
our
developer?
Democratic colleagues. They appear set on
Know what I'm
making the
saying?
inflationary problem worse, further causing declines in real wages.
Yeah, it
with
looks like
more
a
reckless
developer.
spending
Okay,
that
gotcha.
loses demand,
Let's
and
see.
regulatory
Games
and
have been
protectionist
absolutely
policies
getting
that limit
destroyed
supply,
this
that in
past year.
combination ultimately push prices for basic goods higher.
Guys,
The
check this
crisis
chart
we
out.
face now is inflation,
This is Take-Two.
complicated by policymakers who unwisely behave as if it's still March
Quiet
of
this down
2020.
because nothing is being talked about yet. This is Take-Two Games. Check it out.
School closures and government
An interesting case study, if you think about it. So, yeah, who said it? Meg. Okay, yeah. So Meg says here, Take-Two. What's going to happen? Huge drop. Is it, what happened? Was it news or earnings? News or earnings? Why did it drop so much?
Thank you, Senator Toomey. Chair Powell, please rise.
Wait, why did it end? Wait. Oh, here it is. Under certain circumstances, Take-Two is required to pay to Co, or Co is required to pay to Take-Two. That was such a stupid sentence. Termination fee of $550 million? Oh, $550 million for this kind of company? That is not good. That's detrimental.
Welcome you to the committee. If you'd like to introduce family.
Under certain circumstances, Take-Two is required to pay to Co, or Co is required to pay to Take-Two. So which one is it? Is it just on rumor? Is there news here?
Thank you. Is this on? Yes, thank you. I didn't bring
So the question stands, will we recover from this huge gap down, right? Because if we do,
Thank you. Chairman Brown,
that's a nice little 25%.
And other members of the committee, thank you for the opportunity.
All speaking, we'll get there in just a second. Let me see.
I'd like to thank President Biden for nominating me to serve a second term
Here, we'll come
as
back to
chair
that.
of
We'll
the
come
Board
back.
of Governors of the Federal Reserve System. I would also like to thank my colleagues throughout the Federal Reserve System for their
That's who
dedication,
bought Zynga.
perseverance,
That's right.
and tireless work
Interesting.
on behalf of the American
I don't know
people.
why Zynga's like
Their
not
commitment and
great
expertise were
company, to
essential
be
to
completely
the
honest.
Fed's response to the
But,
COVID-19
yeah.
crisis and remain vital to the implementation of monetary policy as our economy continues to progress. Particular thanks go to my wife, Alyssa Leonard, and our 3 children, Susie, Lucy, and Sam.
No, I
Their
know
love and
Rockstar
support
Games,
make
but it said
possible everything
Take-Two
I
was
do.
associated with Rockstar
My
Games.
5 siblings are all watching, or will later claim to have watched.
What confirmation are we looking for?
And we
Bearish
are
or bullish?
thinking
Currently,
of each
I
other
mean,
and of our
I'm not
parents
looking for
today
a specific
with love
direction.
and
Like, I'm not
gratitude.
thinking that like I want
4
it
years
to go
ago,
up, so I'm
when
going
I
to
sat
look
before
for
this
any
committee,
reason.
few
Like,
could
I'm
have
more just
predicted the
thinking it
great
more like a
challenges that would soon
scientific
become
experiment.
ours
You know,
to
I'm
meet.
just observing.
On the
Right
eve of the
now,
pandemic, the U.S. economy was enjoying its 11th year of
what does
expansion.
it look
the
like? Well, right
longest
now we're
on
just
record.
consolidating, and I think it's going to be that way until either
Unemployment was
good or
at
bad news
50-year
happens. But
lows,
it's probably going to
and
stay
the
within
economic
this rectangle
benefits
for a
were reaching
while.
those most on the margins.
But we'll see.
No
I think
obvious
something will be
financial or
said, and then
economic
it'll either go
imbalances
boom up
threatened
or
the
boom
ongoing
down,
expansion.
and we'll go from there. That's my guess.
But this attractive picture turned virtually overnight as the virus swept across the globe. The initial contraction was the fastest and deepest on record.
Also, if you're
but
just
the
getting in
pain
here, we're
could've been
obviously
much
covering the
worse.
JPOW meeting,
As the pandemic
and we'll
arrived,
do
our
that for the
immediate
next like
challenge
40
was to
minutes, and
stave
then I have
off
to get off.
full-scale
But we'll be
depression,
covering this for a
which
while.
would require
Please leave a
swift
like
and
if you're new
strong
here, or if
policy
you're
actions
not
from
and you just
across
haven't done
government.
it. Please leave a like. Just do it.
Congress provided
It's free.
by far
It's
the
free to do.
fastest
It's
and
just a little
largest
thumbs up.
response to any
Looks better when it's
post-war
highlighted
economic
anyway.
downturn. At the Fed, we used the full range of policy tools at our disposal. We moved quickly to restore vital flows of credit to households, communities, and businesses, and to stabilize the financial system. These collective policy actions, the development and availability of vaccines, and American resilience worked in concert. First, to cushion the pandemic's economic blows, and then to spark a historically strong recovery. Today, the economy is expanding at its fastest pace in many years, and the labor market is again strong. As always, challenges remain. Both the individual shutdown and the subsequent reopening of the economy were without precedent. The economy has rapidly gained strength despite the ongoing pandemic, giving rise to persistent supply and demand imbalances and bottlenecks, and to elevated inflation. We know that high inflation exacts a toll, particularly for those less able to meet the higher costs of essentials like food, housing, and transportation. We are strongly committed to achieving our statutory goals of maximum employment and price stability. We will use our tools to support the economy and a strong labor market, and to
Remember
prevent
when
higher inflation from
politicians
becoming entrenched.
and people like Jerome Powell would speak,
We can
and then
begin
the
to see
speech
that the
would be like,
post-pandemic economy is likely
something
to be
good.
different in some respects.
you know,
And the
they would
pursuit
say
of our
something
goals
and you'd
will
be
need
like,
to
wow,
take
I'm really
those
inspired by
differences
what he's
into
saying.
account.
Do you remember like
To
those
that end,
times?
monetary policy must take
And
a
now this
broad
is
and
more like a
forward-looking
formality
view,
speech,
keeping pace with an
and then the real
ever-evolving
stuff
economy.
happens.
Over the past 4 years, my colleagues
Interesting.
and I have continued the work of our predecessors to ensure a strong and resilient financial system. We increased capital and liquidity requirements for the largest banks, and currently capital and liquidity levels at our largest, most systemically important banks are at multi-decade highs. We worked to improve the public's access to instant payments, intensified our focus and supervisory efforts on evolving threats such as climate change and
Oh
cyber
man,
attacks,
how long is this
and
going to
expanded
go?
our analysis
I want to
and
get to
monitoring of
questions
financial
because
stability.
I only have
We
like
will remain vigilant
37
about
minutes, give or
new and
take.
emerging
I'll try to stay
threats.
on it like as long as I
We
can, but
also
I do
updated
have
our
to get going
monetary
at some
policy
point. So
framework,
I hope
drawing
we can
on
get to
insights from
questions
people and
really quickly.
communities across the country to reflect the challenges of conducting policy in an era of persistently low interest rates. Congress has assigned the Federal Reserve important goals and has given us considerable independence in using our tools to achieve them. In our democratic system, that independence comes with responsibility of transparency and clear communication to keep
Transparency
the
and
public
clear
informed
communication,
and
they
enable
just said.
effective legislative oversight. That duty
Okay.
takes on even greater significance.
Remember that one
the
time
Fed
when they're
must
like,
take
no,
extraordinary
inflation's
actions in
transitory.
times of crisis.
And then they're like, no, you don't understand what
In order
transitory
to facilitate
means.
that transparency and to earn your trust and that of the American people, I have made it a priority to meet regularly and frequently with you and your elected colleagues, and I commit to continuing that practice if I'm confirmed to another term. The Federal Reserve works for all Americans. We know our decisions matter to every person,
All
family,
Americans.
business, and community across the country. I am committed to making those decisions with objectivity, integrity, and impartiality, based on the best available evidence and in the long-standing tradition of monetary policy independence. That pledge lies at the heart of the Fed's mission and is one we all make when we answer the call to public service. I make it here again with force and
Depending on the direction, are you watching calls or puts?
Everything we do
I
at the
mean,
Federal Reserve
I don't
is
know
in
the
pursuit
direction.
of the goals
No,
set for us
neither
by
does the
Congress.
market, right?
I'm
We're
honored
still in
to
this
have worked in service to
consolidation
those
rectangle that I
ends
drew.
since I
Still in
joined the
there.
Fed in 2012.
So no one knows. We're waiting
and
for
as
bad
chair
news
for the
or good
past
news.
4 years.
Second,
Thank you. I
what
look forward to
contracts
your
are you eyeing up for confirmation?
Thank you,
Again,
Chair Powell.
like my strategy has not changed.
Many,
At least a week out.
Many working Americans
for
are
specific
concerned
contracts to
about
show you
rising
guys, but
prices, and I think
see.
President Biden's decision to renominate
God,
you to a
dude.
second term as chair shows he's confident you'll continue to lead our economy through this ongoing
Relax.
crisis. In November, you indicated that the rise of the
I'm looking at 10-day
Omicron
contracts right
variant,
now. It's pretty good pricing, actually. 10-day
586,000
contracts
new
ain't bad.
cases daily over
What about
the last
13-day?
week, that the rise of the
13 days is
Omicron
also
variant
not
poses
bad pricing
significant
at all.
risks to
15?
employment and economic activity.
15
Do you
days is a
agree
little bit
that
expensive,
higher
but not terrible.
prices are related to the
Okay,
supply
looks
and
like contract
demand
prices are actually pretty cheap right
imbalances that
now.
can be traced
For calls,
directly
for
back
calls.
to the
Let me see what they are for
pandemic and the
puts.
reopening of
Let's
the
say
economy.
it keeps going down.
Yes, I do. For the most part.
Oh, puts aren't even that, okay. Contracts in general is just kind of cheap.
To developments,
That's kind of nice.
including strong demand and also supply constraints.
Thank you. Last year, FSOC
I would look at 13 to
released its
15 day.
report on climate-related financial
contracts.
risk, which describes how climate change is a
Slightly
threat
in the
to our
money,
financial
slightly out of the money.
stability.
You'll be fine with
In the
either
past,
as long
you
as you can
said,
afford
your
it.
words,
It's looking
climate
around
change
$5
is
per
emerging risk
contract.
to
Which actually
financial
isn't bad.
institutions, the financial
Or sorry,
system, and the
$5 per
economy.
contract. Yeah, $5 per contract.
Well,
Which
Chair
isn't
Powell,
terrible.
The Fed follows
Isn't
the
really bad at
FSOC
all.
report's recommendations, including implementing climate stress tests for the biggest banks.
We are looking at climate stress tests. I think it's very likely that climate stress scenarios, as we like to call them, will be a key tool going forward. I would stress that those are very different from the regular stress tests, which affect capital. Climate stress scenarios at this stage are really about assuring that the large financial institutions understand all of the risks that they're taking, including the risks that may be inherent in their business model regarding climate change over time.
Will you make this a top priority if confirmed to another term?
Ooh.
Yes, it will be. I would say within supervision, as I mentioned, that is likely to be a very important priority over the coming years.
So no. Basically no is
The
what he just
position
said.
of vice chair of supervision, but also yours.
Yes.
Okay. It's the Fed's responsibility, as you know, to promote financial stability. It means we need strong financial safeguards in place to protect American workers and families from risks in our financial system. It's all that. Chair Powell, recently the Fed has refocused its full employment objectives to make sure it includes workers of all backgrounds. Do you agree that when all workers, including women, including black and brown workers, are able to fully participate in the workforce, that our economy grows? And do you think it's important for the Fed to understand and proactively address racial and gender disparities in wealth and income and employment in our country?
So what we saw at the end of the last very
Nice little
longest in our
softball
history
question.
expansion was that as the labor market tightened, the benefits began to go more broadly to those at the lower end of the income spectrum and to groups that have been more marginalized from an economic standpoint. And that was seen, I think, very broadly as a highly desirable set of outcomes. So our tools do not generally have direct distributional effects, but I do think that we see now the great benefits that a strong labor market can bring to, right across the whole population and for the whole economy.
But
such a
you are
givey,
suggesting
like a
from your
gimme
answer
question.
that
So easy.
only when there is strong demand for labor do people who are more on the margins of society, people of color, women, people who have not done as well, only then will they benefit? Does the Fed have responsibility beyond that?
Well, of course, we have responsibilities in bank supervision and community affairs and fair lending and things like that. But just focusing on monetary policy, our principal tool is interest rates, and they affect demand over time. And I do think the main thing that we can do is to make sure that, consistent with the inflation side of our mandate, that we do foster a strong employment market.
Is part of that a more diverse workforce at the Fed?
So as you know, we work very hard to
What is
achieve
happening?
diversity, and as all major American institutions, public and private, do these days, we certainly
Okay,
do.
so basically what they're
And
asking as a
we
very
think that
simplified
having a
question,
diverse
if we just take
workforce
race out of it, are more people in
makes
the
us
labor
better at doing our
market good for the
jobs,
economy?
and so
And Jerome Powell's like,
it's an important
yes.
focus
And then he's
and
like,
high
okay, but
priority.
should we have more diverse people in the labor workforce? And he's like, that's
Thank you,
not
Mr.
my
Chairman.
job.
Chairman Powell,
And he's
and
like, yeah.
all those
But in the
great
Fed,
efforts
should
to
there be more
shift
diversity? And he's like,
Fed's,
of course.
focus on
Like, why
acceleration
are we going into this?
and the indication that FOMC members expect now a series of interest rate increases this year. I'm trying to understand where this leads to, and I wonder if you could comment on the fact that if we had 3 or even 4 25 basis point increases in overnight rates, we would still, in my view, have a very accommodative stance with negative real short-term rates. Is it your view that it's realistic to bring inflation back to the target level if short-term interest rates are negative, real rates?
So the way I would look at it is this. What we have now is a mismatch between demand and supply. We have very strong demand in areas where supply is constrained, particularly around goods, particularly around things like cars. So we have to, how are those two things going to get into better into alignment? Well, part of the answer is going to be through shifts in demand, and we think that part of it will be through the return of greater supply. So I don't think we look to get all of the realignment between demand and supply through the demand channel, although we should get some. But at the same time, we do think we'll get, over the course of this year, return to normal supply conditions, and that's going to affect our policy. I will say, though, if we see inflation persisting at high levels longer than expected, then we will, if we have to raise interest rates more over time, we will. We will use our tools to get inflation back, and the main reason is this. That to get the kind of very strong labor market we want with high participation, it's going to take a long expansion.
Still
We can see that
consolidating, though.
participation is
It's
moving
dramatic,
only
but
very
it's not
slowly.
actually amazing.
And to get a long expansion, we're going to need price
consolidating.
stability. And so in a way,
So
high
it looks
inflation
cool, but
is a
nothing's actually
severe
happening.
threat to the achievement of maximum employment and to achieving a long expansion that can give us that.
I think that's a very important point. Let me also just ask you, as I mentioned, I understood the need for quantitative easing, the extraordinary measures that we're taking during the crisis.
Quantitative easing.
But I
Use the
worry
word.
that the Fed's decision to continue to use these policies well after the crisis had passed, and in fact we're in the midst of a strong recovery, increases the risk of normalizing behavior like this bond buying. So I think it's your view that it's important that this not become normal routine part of Fed behavior. But could you clarify that? And if it is important that this not become a routine matter, how do we ensure that it doesn't?
So I guess I would start by saying that the last two downturns there's been nothing normal about them. They've been two historically large downturns, one being the global financial crisis and one being the pandemic. And we were called to invent new tools and use all of our tools. If we had
Ben, we only started
so really,
a week
if we had a
ago, so
regular
I'm
way
guessing
recession,
no one's done it, but
a couple
people
of
are
quarters of
definitely
negative
making
growth,
money
a
here,
typical
not bad.
recession, then the question would be, what do we need to do? And so in this era
Would be bad
of very
news.
low
Well, everything
interest rates,
still
there's
is
not
just a
going to be as
rumor,
much
so
room to
confirmation
cut.
that rate hikes
But
are
that would be
happening,
the
stuff like
first thing
that,
that
and
we
then
would do.
whatever
Now,
these questions are going to be, like,
It's
it can
just
go either
because
way.
we
That's the thing.
we have been
No one knows.
and probably remain in an era of very low interest rates. We would have to look at asset purchases as the next tool in line, but I don't think we'd automatically use it unless it was necessary.
I would certainly hope we wouldn't automatically use it. I would hope that there would be a very, very high threshold to get over, especially when you consider the ways in which it distorts the allocation of capital. As I mentioned in my opening remarks, one of the things I'm very concerned about is especially the regional banks having strayed from the Fed's statutory mission on monetary policy into inappropriate and overtly political advocacy. Just one of many, many examples, the Boston Fed conducted a virtual event as part of its Racism, and the Economy series, in which the speakers routinely and adamantly called for defunding the police.
Ruh-roh.
Nothing to do with the Fed's mandate.
Nothing's been said
For
yet,
7
but-
months now, I've been asking for information from several regional banks about their political activism, and for 7 months, they have simply refused to comply with my request. So I've requested some documentation from the main Fed with respect to this activity, all of which, by the way, is subject to FOIA in any case. Now, I'm sure it's not your opinion that the ranking member of the Senate Banking Committee is entitled to less information than a member of the general public would get through a FOIA request. So can you commit to getting me the information that is now long overdue?
So I am aware that you have submitted a FOIA request and we're processing it now, and I don't know what's asked for. I don't know whether it's actually covered by FOIA, but to the extent that it is, you'll of course get it.
FOIA is
I think
Freedom
it's
of
very
Information
important
Act,
that
by the way,
this
if you
committee
didn't
and
know.
Congress understand how the Fed reaches decisions to engage in political advocacy. Thank you, Mr. Chairman.
Senator Toomey. Senator Reed from Rhode Island is recognized.
Thank you very much, Mr. Chairman. And Chairman Powell, congratulations on your renomination. I believe that President Biden has made two excellent choices, yourself and Governor Bernard. I think you've worked together hand in hand for many
Bernard.
years. I think you'll be a superb
Brainerd.
team, and so I look forward to supporting your nomination and Governor Bernard's nomination also for vice chair. And let me join my colleagues in commending you for an exceptional job with respect to the pandemic. One of the interesting consequences of the pandemic and the employment market is that we've seen wages rise. In fact, we've seen them rise with respect to
Not going to give it? No.
factory workers, non-supervisory personnel, about 5.8%. And my concern is, would an increase in interest rates in anywhere begin to slow down that rise or indeed reverse it?
Decent question.
So like you and I think like everyone, we think wages moving up is generally a good thing. But if you look back through history, there are times when wages have moved up in a way that has fostered persistent inflation, and that hurts everyone. It particularly hurts people on fixed incomes. So we don't see that right now, but we do see these are the biggest wage increases in decades, and so we're watching carefully. And you know, to the extent we are looking at this year, what we see is an economy where the labor market is recovering incredibly rapidly, really beginning around the middle of last year. The unemployment rate's been dropping at more than 0.3% per month since last June. It's now below 4%, which is pretty close to half-century lows. So that part of the employment market is doing very well. Meanwhile, inflation is running very well, very far.
What do you guys think about that?
Target
Wages.
And what that's telling us is that
Should
the
we
economy
keep
no
increasing
longer
it? Are
needs
they
or
already too
wants
high? Like, what are your
very
thoughts on that?
Highly accommodative
On wages.
policies that we've had in place to deal
He says
with
in
the
history,
pandemic
most
and
of the time when wages increase,
that's
inflation
what
goes
that's
up.
really
I
about.
think he's being very political
We're
about
really
that.
just gonna be
Basically, every
moving
time
over the
we
course
increase
of this year
wages at a significant amount,
a
inflation
policy that
follows.
is closer
Usually
to
every time.
normal, but it's a long road to normal from where we are. Right now we are very highly accommodative, and it is really time for us to begin to move away from those emergency pandemic settings to a more normal level. It really should not have negative effects on the employment market.
Which it's ironic because, as you pointed out in your opening statement, when you took over, we had 11 straight years of significant economic growth, but that was not translated into the wages of most working people, particularly entry-level and non-factory workers.
Interesting
et cetera.
counterpoint.
And now we've seen a situation where that's reversed, and I would hope that we could continue that type of progress. And I know you'll be sensitive to that going forward. One of the interesting things about the situation we face now is that the Fed tools are probably most effective reducing overall demand. But a lot of what we're facing is supply problems. The situation about
I honestly thought
automobiles,
the video was
the problem
buffering when he first
there,
started
in
talking,
fact,
Panther. I
I
was like,
think
is he
used
actually
cars are
speaking
so
or?
expensive, they're distorting the inflation numbers significantly. And that's a result of the shortage of microchips and other types of chips, which is a result of the pandemic.
Okay,
These
he's saying a lot of
supply
words, but
issues.
basically
So
what
to
Mr. Reed is
extent
saying here is kind of an interesting counterpoint. He's saying, yeah, I see what you're saying, that
dealing with
when we
demand help
when we
supply?
raise wages
Maybe that's the real
significantly,
problem.
inflation
No, it
usually
really
follows.
won't.
However,
We
there was
really
an
can't
11-year period
directly
before
affect
this. What
the
he's saying is
supply side
2010
conditions.
to
That's why I mentioned
2000,
this really is a problem
2008 to
both of very strong elevated
2019.
demand,
And what he's saying is that in
in
that
a
time
part
we
of the
see
economy,
significant
the goods
economic
sector,
growth.
the
However,
durable goods
wages
sector,
stayed
things like
static.
washing machines and
So
cars
yes,
and all
it's
the things
agreed
people
that,
bought
when
during
you
the course of the
increases
pandemic, when they
significantly,
couldn't spend
inflation
money on
follows.
travel
However,
and
when things
services.
are good, we didn't even
That's
raise it
where
at all.
spending
So
is running at a
where's the
level
middle ground here? Is basically what he's
above where
saying.
it was before
Pretty
the
interesting
pandemic,
counterpoint.
and it's just kind of overwhelmed the supply chains, most of which are global. In these days, you're getting parts and fully assembled products coming in. So we can affect the demand side. We can't affect the supply side, but
I'm a
this
bit
really is a
paranoid.
combination
Okay,
of the two.
understood.
Well,
Fair
and
enough.
a final
Yeah,
point I
I
want to
agree.
make is that the issue of climate change is absolutely critical. It's an economic issue. I don't think you want to see a lot of banks owning property that's literally underwater. But if you look at any of the analysis going forward, that could be the case. So I would hope that the Fed would view this as an economic issue and pursue it as an economic issue.
not
that's
going
going
well.
to affect us dramatically.
Nothing crazy
my
has been said
colleagues
yet,
in the
though.
White House has been
Nothing
one of the
crazy.
most staunch visionaries and advocates for that
People
position.
still don't like him.
And I hope the Fed is responsive. Thank you, Mr. Chairman.
Thank you, Senator Reed. Senator Shelby from Alabama is recognized.
Thank you, Mr. Chairman. Chairman Powell, welcome back to the committee. You've spent a lot of time with us in the past. Inflation is currently surging at its highest rate in 40 years. And while I appreciate the decision that the Fed has made to begin tapering, I'm concerned that the Fed missed the boat on addressing inflation sooner. A lot of us are. And as a result of that, the Fed, under your leadership, has lost a lot of credibility.
Exactly.
I
Exactly.
only have a little time, so I have a number of questions, and I know you can probably remember them, but maybe together we'll remember them all. But I'd like to touch on this, if you would, I'd like for you to. Why did the Federal Reserve initially forecast inflation to be transitory? Secondly, has your view on the threat of inflation changed? Why? What assurances can you provide here today that the Fed has a better grasp today on inflation than a year ago, and so forth? And what factors have caused the U.S. to have greater increases in inflation compared to other developed countries? And I guess lastly, yes, how important is price stability to the American people? And that's a lot of questions, but these are all relevant to your job. Thank you.
Respecting your
Sure.
time, let me go right through these. First, let me say price stability is half of our mandate. There's no basis in the law for preferring maximum employment over price stability or vice versa. They're equal. However, at different times, one of them is farther away from its goal, and that's the one we need to focus on a little bit more. Sometimes that's maximum employment. Sometimes it's inflation. I'd say now it's inflation. So on inflation, why do we say transitory? We said that because we thought that these supply side bottlenecks and shortages would be alleviated much more quickly than they have been. There's no empirical experience with this before. We haven't had the global supply chain collapse. We haven't had this kind of a labor force shock before. So we and essentially all other mainstream forecasters forecasted that by now we'd be seeing much lower inflation, and that's not what happened. So what's changed is that, just as I mentioned, the supply side constraints have been very persistent and very durable.
1 year, 1 day.
We're not seeing really a lot of progress.
A speech like this make the
if you look
trend
across
invalid and break the trend line
global
holding for a few
supply
months.
chains and what's happening domestically, look at ports, look at Long Beach and L.A., the two big ports on the West Coast for Asia.
1 year, 1 day.
The number of ships at anchor is still at a record level. So we're not really seeing yet the kind of progress we essentially all forecasters really thought we'd be seeing by now, and that's really what's driving it. I think we did foresee the strong spike in demand. We didn't know that it would be so focused on goods, but so that's really what happened. And so I think we learned that.
Something
it
like
wasn't that, it was just, this is a unique set of circumstances. We haven't had, really the United States economy is so dynamic. The supply side adapts quickly. And, you know, there are new companies being started and old companies dying all the time.
That's what whatever.
This is a situation where there actually are hard constraints. People want to buy cars. Car makers can't make any more cars because there are no semiconductors. So that's never happened. I can't think of another example of that, and that's true across.
Might be bouncing.
What factors really? It's the supply side. Did I miss any? I like to think I covered, at least touched all 5 of those.
What have you really learned, and you would share with your fellow Board of Governors to get a grasp as much as you can on inflation? Because a lot of us have been on the committee a while, and we remembered what Dr. Volcker did with the Fed under his leadership, and it was draconian, but it worked. I hope we won't have to do that, but you've got to do whatever you have to do. Do you agree?
We have to achieve price stability, and I believe we will, and I'm confident we will. And again, it's not just a question of restraining demand.
Oh, that's exactly what's happening. Whatever.
Right now, we're stimulating.
Everyone's
demand
like
with very
bracing for bad
policy.
news. So
As
no
we
one's going to
move
make big
through this
moves.
year,
No one's going to make big moves here.
In all likelihood,
don't expect it.
We don't know the future, but if things develop as expected, we'll be normalizing policy, meaning we're going to end our asset purchases in March, meaning we'll be raising
all
rates over the
senators are
course of
old
the
white
year.
guys.
At some point, perhaps later this year, we will start to allow the balance sheet to
I heard it
and
too.
that's just
I heard it.
the road to normalizing policy. That's what we're going to be doing. Of course, we're committed. But we also we do believe, and I think.
As a side note, okay, he's not really saying anything here. As a side note, though, what are you guys' thoughts about this? The age of the average, congressperson, senator, that kind of thing. It's like 55. It's kind of old. Sorry, that was my dog. I had to let him out. Would you guys want to see, like, let's say 35-year-olds senators? Is that something we want to see? Do we want to see younger senators? Is that a thing you would want to see in government?
Senator Menendez from New Jersey.
1 second.
Recognized.
Thank you, Mr. Chairman. Chair Powell, let me start by reiterating a point that I've made, unfortunately, far too many times. And the latest batch of nominees leads me to, once again, the conclusion that there is a serious diversity problem at the Federal Reserve. Latinos are the country's largest minority. They make up nearly 20% of the entire U.S. population.
Okay, I'm seeing very different
it's
answers here. I'm
outrageous
making a
that they
poll.
have no representation in Fed leadership. There's never been a single member of the Board of Governors or regional bank president that has lived the experience of being a Latino in the United States. And that means that the voices of 1/5 of the country's citizens are repeatedly drowned out when the Fed is making critical decisions on economic policy, decisions that affect whether a Latino family can afford their first home.
Okay, we're talking more about race, which isn't a bad thing, but it's just not Jerome Powell's job.
Save for a comfortable retirement, or get a loan to expand their business. In late
Jamie
October,
says something
several
interesting
of my
here.
colleagues and I
Unfortunately,
sent you a
we
letter
need old people to do
requesting that
this.
you work closely
They have
with the
maturity
Boston and Dallas
and
banks
experience.
to recruit diverse candidates for their
Fair enough.
president
Fair enough.
positions.
I think people might
We
disagree.
received your response to that
I don't
letter just
not
last week.
disagree with it. Agreed, if you have more years, you have more ability for experience. However, I will say there are a lot of 65-year-olds out there that I don't know if they have the maturity and the experience.
Your confirmation vote, including what specific changes
You trust that
you
because
made
they
to
have
the
more
process
years, so just
and
by
how
the
they
numbers they
contribute
should,
to a
right?
more diverse
I don't know.
candidate pool.
Could you imagine a 35-year-old raising her Fed hikes? Good point. Great
While we
point.
face, significant
They'd be so
challenges
much more
to
hesitant to do
overcome
that, wouldn't they?
barriers and supply chain
Wouldn't they?
disruptions that are both causing families to face higher prices for
I'd
a
see
variety
term
of
limits,
goods.
so it'd be
The
better
fact is
for
that we're
more people to get
experiencing
in, different
a
ideas,
strong
not becoming career
recovery from an
politicians, of
unprecedented
course. Beholden
Thanks to
to
the
special
American
interests,
Rescue
yeah,
Plan and other
absolutely.
policies put in
Absolutely.
place
We
by
definitely need to
Congress
see
and
term
the Biden
limits.
administration, we gained an average of 537,000
More spread out
jobs per
representation,
month
agreed.
since President Biden took office.
Some 35-year-olds I wouldn't trust much. I mean, some 60-year-olds I don't trust much either, right? I see them. I see it both ways.
Manageable while not dampening the
Uh,
strong
d- d-
job
d-
and wage growth
let's
that we've
see.
seen over the past year.
Old, not representative of the larger
So by so
population.
many
Okay,
measures,
fair enough.
labor demand relative to supply is
They haven't been
is
through
at its
economic
highest
downfalls as much
level,
as
really,
that's true.
that I
So
can
if they're
remember.
65, that means they were
The level of
born
job
in
openings
the
is at
60s
an all-time
ish,
high as a percentage
right?
of the labor
60s.
force. The level
So that
of
means they
quits,
went through the 80s
is-
struggle. They've been
labor
through the
economists
Black
look at
Swan
the level of
2008, no
quits as a
problem,
real
right? I
indicator
mean,
of
they've been
how
through the
strong
dot-com
labor is. The
bubble. They've been
percentage
through
of
all
quits,
these
the number of
bubbles.
quits is at
They
an
they
all-time
know
high.
somewhat
So,
of what's going on here.
um,
So they do have
the-
that
the
experience.
problem is not
Blanket
lack of
statement. They have that experience.
for
True.
labor. The problem is that there's a significant supply
Powell probably
problem,
lived through the Great
problem, which is
Depression.
associated with the pandemic.
There's
and
a lot
range of
more.
other
Yeah, fair
factors.
enough.
Participation
Yeah, I
is
think
not
he's been around
recovered.
since the
But as you
revolution.
can see, for people who are in the labor force,
They're wise
the
35-year-olds
unemployment
and
rate is
stupid
dropping
60-year-olds.
at a
100%.
historically
I
fast
see it both. I just want the most.
So,
I just want the best
we don't have
congressperson,
a
right?
labor
I
union
could
vote
care less
to
about the
solve
age
by
specifically.
through our policy.
Like
What we
because
have is
someone's
supply
65
problem.
or if someone
So
is
what is the
35,
threat?
that
Well,
doesn't
we're clearly on a
tell me
path to have
anything,
an
right?
even better
It tells me
labor
that
market over
65-year-olds
time.
has
What
30
are
more
the big
years,
threats to our getting there? Well,
right?
I would say
Than the
right
than the
there,
35-year-old.
top
I
of
mean,
the
that's what that tells me.
is the
But
threat
who's better for the
of price
job?
stability.
Like that's what matters to me.
If
Are they going to
inflation does
make
become
better
too
policies?
persistent,
Are they going to
these
push
high
the
levels of
things
inflation,
that are
penetration
representative of
in
their
our economy and
constituents,
people's
right?
thinking,
That's the better
then-
thing.
then
So now the
therefore
question is,
that will
okay,
lead to
so if
much
that's the
tighter
case,
monetary
I think
policy
what
from
really
us,
needs to be
and
asked
could
is,
lead to a
would a
recession.
35-year-old
And
be
that would
more
be
or
bad
less
for
likely
workers.
in
So really,
general to be, beholden to
achievement
special
of
interests?
maximum employment,
Because I think
which
that's
we
the biggest
really
thing with
need,
politicians, right? I think
continued
that's what
progress
most
in
people have a
hiring
problem
and-
with.
and
It's not that they're doing
participation is
such a
gonna
bad job.
require
It's that they're
price
kind of
stability. And that's gonna
alliance with
require
these
us
really
to-
bad companies or
to
bad
use
whatever
our
groups,
tools
and they're not
to the
getting the
extent
stuff
they
done
work
because
on
they're
the
kind of,
demand
again,
side,
beholden to the special
while we
interests.
also expect,
So I think
some help
one
from
of
supply side.
the main arguments is that a 35-year-old might not be as, grabby towards the money because they have these kind
Over
of
time,
young idealisms.
yes. Over time, the
But
question
that's
is
just
how
another point.
fast, and
I'm
the
not saying
risks
that's
that we're
100% true with
running in the
35-year-olds, and I'm
meantime,
definitely not
that
saying that's 100% true with
inflation
60-year-olds,
starts to get
that
entrenched.
they also
But
are
certainly I
only
believe that,
in
and
special interest
you
groups.
make a great point.
Just a point.
About
Just a
that
point.
vaccination. Getting ahead of the pandemic.
An IQ
I don't
test.
think 2 years
Interesting.
ago we thought
Okay.
we'd still be having
30
record
more
levels
years
of
of bad
cases,
habits. Fair, fair,
even
fair.
close to record levels
Younger
of
people know new
hospitalizations.
generation problems,
Getting
unlike
past the
these old
pandemic
folks. That's
is
also
the
a really
single most
good
important thing we can
counterpoint
do.
that, it's really difficult to explain crypto, for instance, to a 65-year-old. Super difficult. Trust me, I've tried. I tried to my grandmother. It's impossible. Like, it's so difficult to do. So that's a whole nother thing, is that we're kind of more in tune with the future, with that means, right? Whereas the older generation is attuned with the past. Does that make sense? So that's another good counterpoint. So it's like, what do you want? Do you want the experience of the past, or do you want the nuance of the future?
The earlier Delta,
I'm a young person. I go to college. I don't think age really matters. Unfortunately, with young people, they think they know everything from learning, but some older folks have actually lived it. Good point as well. Very good point as well.
Is going through the whole country at a pretty rapid rate.
Yes, because
We
younger
follow
people,
that
I'm
very,
assuming,
very
is they
carefully.
can relate to our
We
problems
said
and
we
want
didn't
those
know
problems
much about
fixed.
vaccines
Young generations are all about
pandemics
advancement and
2
moving
years ago.
forward,
We've all had
almost
2
to a
years to
fault,
learn, so-
right? Almost to a fault.
But we
Is that young idealism can be great, but it can also, be really, really bad, right? We can see both things. We can see both things. I think that idealism kind of gets in the way of actual progress, right? Like, because we want this idyllic future that can actually get in the way and be an obstacle to real progress. Whereas someone with experience really knows how to get things going. So great counterpoints all around.
I also asked you
Advocate for term limits. Yep, agreed. You can get new senators that are younger, and you can get new senators that are older but fresh for the game. Beautiful.
report were because the Fed wanted to ensure that their analysis
Heard
was
of
correct,
Facebook Congress Court
complete,
meet thing?
and com-
I've not even
That release
heard of
was
that.
expected in the
But they don't
coming
understand internet.
However, that report
That's
still has
that might
not
be a
been
lost cause.
released.
The older
Do you have an
generation
update
is
you
looking
can
to the
share on the
past
status of the
to
report?
determine the future. 100%.
Are there
100%.
problems with sharing
Yeah,
this
absolutely.
report with
So again,
Congress and the public and what
yeah,
the Fed may
real
be
active chat now.
proposing with
So
respect
again,
to
that's really what it
possible
comes down to
centralized,
is,
public
there's
digital
good
currency.
counterpoints to either, right? I'm not saying one is
So
better.
The report
I'm
really
not saying one is better.
ready to go, and I would expect we
And
will drop it. I
Toy
would
Pen
say
just came in with the
in coming
perfect
weeks,
comment
but
too.
it really
I'd rather
is
listen to
a
economics
situation where experts, ready to go.
economists
The
rather
fall
instead of
for
politicians
us,
on this topic.
given,
Yeah,
you know,
absolutely.
changes in monetary policy and
Absolutely.
other things going
It kind of
on,
makes no
it was
sense to
hard
me that I
to
get
come
why,
in
because
at
I know it's like it's a rule. Senators
quite
have
to
to be
where
the
we need to
ones
get
that
it, but
are
it's effectively
questioning
there
Jerome
now.
Powell
I
here.
will tell you
But
this
doesn't
would
it
be,
not make sense here that like why
within
wouldn't we
weeks
have like
will be
professional economists coming in
publishing it.
and
By
questioning
the way,
Jerome Powell
it's
on
more going to be an exercise
fiscal
in
policy?
asking questions
Like,
and
does that not
seeking
make
input
sense?
from the public rather
And
than
yeah, I was
taking
just gonna get
a
to
lot
that
of
too. Like,
positions
agreed. Like politicians on like
various
they're
issues,
kind of
although
they have to
we do
wear
have
like
some
a
positions.
million different hats, right? They have to know literally everything about their
I hope
constituents,
that
about
you'll
their
read this
local government, about
couple of
everything. And then
weeks
not even beyond that, they have to go
as you know, I've been asking you
international
and
too if they
others
want to
at the Fed
question
about
the
this
president,
for
Jerome
a
Powell,
long
whatever. They have to know
and
everything.
I really do believe
But to me,
it's
that makes no
time
sense.
that the
Like,
Fed
if we're talking about
release
fiscal
this
policy,
report
I
so that we
don't think
can
I want
engage in
just
further
my
discussion.
senator's questions.
I want
Yes,
to
he,
also,
you know,
with the rest of
represents
my time, go
constituents,
back
and
to
then
the issue
they're
of
basically
inflation.
representatives as if we
I
are
know we've
asking
talked
Jerome
about it a
Powell
lot,
because
but
that's what
there's
we
some
want our representative
in
to ask.
response to my question
But for
about
me, why would I
inflation last
not want
November, you
professional
confirmed that
economists coming
inflation
in and saying,
expected to
hey, here's
certainly
like
last
what happened, right? They know
through
so
the
much
middle
more about
of
this. I want them to question them.
of this
They have
coming
much
year.
better questions than I can even
What
think
do
of,
you
in
now
my opinion.
expect with
So it does
the
seem
time
strange
we've
that like
seen
this is
since
kind of coming
you
in.
last answered these questions in front of the committee? What do
But
you
again,
now
just another
expect with
counterpoint. I'm
from
not saying one is right or
will
wrong. I'm not
address
saying we
this
should have
question?
younger people specifically. I'm not saying older people should be the ones taking over
I wouldn't say
specifically
things
either.
have changed
It's really just the
much
best
on
people for the
that
job.
front since
And I'm with
last
Toy Penn here
November. I
saying
think that
economists kind
inflationary
of are the best
pressures
person for the
do
job
seem
for
to be
this
on track
specifically,
to last
questioning about
well
fiscal
into the
policy.
middle of next year. And if they last longer than that, then
Funny
I'll
how
just
old
say
people
that
make
our
our laws,
policy
but
will
then
continue
again, when it comes to the
adapt. Our
internet, they
policy
can't
has
figure
been
it out.
adapting to this,
Yeah.
you know,
So
for
again,
some
I mean, I
months.
think we've kind of covered
But
a lot of
we'll,
things here
if,
when it's like,
if
you know,
inflation's
good,
going to
like
last
pros and
longer,
cons of
then
either.
that would
Again, I think it really
potentially
comes down to
imply more
like
risk
younger
of
people
its
in general.
persistence,
I'm
and
just saying
ultimately
in
becoming
general,
entrenched,
kind of
and our
look for
policy will
advancement into the
respond
future because it
accordingly.
is more nuanced because they're more attuned
You
with
just
what's
said
going on
well into
right
the
now,
middle
right?
of next year. Did
Older
you mean
people
this
in
year or
general,
next
again,
year?
not saying this is
Or
everyone,
in
in
next
general,
year?
look towards the
this
past
year,
and what
you're right.
happened in
I
the
still think
past
it's
40 years that they
2021
lived,
sometimes.
and then they can draw
Okay.
upon that. That's not a bad
That's all. I
thing.
wanted
We
to
need
share
that,
what you
right? Just as we need a nuanced perspective of younger people.
You know,
Like,
with
we need
regard
both.
to the
We
question
need both.
of
I don't think just one
what's going to
type of
happen over the
person should
next
be in
3 to 4
Congress
months
or anything, right? That shouldn't
as
be
we
the
try to
way.
deal with the
But it's good to
inflationary
see kind of
pressures
all
you
of this
described.
go down. This
If
specifically,
consumer
though, I'm
price
kind of with
inflation were to
the
persist over
economist
the next
perspective
3
in
to
that, like,
4
we
months at
should
somewhere
have
between
professionals,
5 and 7%,
in my
we're
opinion.
not
Like,
moving.
you've seen so many
And
bad
if the
questions from
unemployment
senators.
rate were to remain about where
Like,
it is
I don't even know
now,
what they're talking about
below
right now, but I guarantee
4%,
it's probably not super
uh,
interesting.
what would you expect the tools that the Fed would need to use would be? And I noted in one of your responses on the inflation issue earlier today, I thought I heard you say that the Fed's overnight interest rate would still, even after you may use it as a tool, would still be very low. Could you just discuss I know you can't predict with specificity what the Fed would do, but could you discuss what you expect interest
That's
rates
bait.
to look like as you
That's just
utilize
clickbait.
that
That's
tool?
clickbait.
Sure. So I think to your point, you know, we're at a place where unemployment is now very low, historically low, and inflation is well above target, and the economy no longer needs this very highly accommodative stance of policy. And I would expect that this year, 2022, will be a year in which we take steps toward normalization. That will involve raising the federal funds rate. That will involve ending asset purchases in March.
I would love to have seen
And
them.
perhaps later this year, depending on the run of things, we would also see ourselves.
I would love to see Meet
beginning
Kevin,
to allow the balance sheet to shrink. So
as California
that's
governor.
what I think
I mean, I'm
that's
sure
the
you'd do
broad
a great
picture
job,
of what
but
I see
because I know he
happening.
can't be bought.
The committee
That's what
hasn't
I
made
want
any
to know
decisions
for a
about the
fact.
timing
My
of any of
politician
that,
that's
and
representing me
I
can't be
think we're
bought.
going to have to
Meet
be
Kevin can't be
both
bought.
humble and a bit nimble.
There's no chance he was going to
Here
represent any special
you know, if
interest.
you go back
Zero.
and look
There's
at
a
where-
zero chance.
Where we were a year ago
I would love to
today
see that, but because
in
of
the
that, he was not going
economy,
to win. Because he won't be
you know,
bought, that's why he
vaccines
won't
were
win.
arriving. I think
But
that
still,
in my thinking, there was
I would love
there
to see
was
something
the
like
idea
that. A politician that I
that'll
know
really help
for a
us get
fact
past the
is
pandemic,
not
and
being
it has
bought.
helped a
That's what
lot,
I want to
but
see.
Yet we're at all-time record cases and approaching record hospitalizations nationally. So the thing has stayed with us longer, and I think we're going to have to be open to the changing environment. environment, and monetary policy is going to have to adapt as we learn more. And then we're going to
Coming
learn
back up a little bit.
about the path of inflation, particularly as it relates to these supply side blockages we've had over the course of the first 6 months of the year and every month, really.
So do I understand, are you saying that if the pandemic remains problematic and aggressive, that would impact the timing of any decisions the Fed might make in terms of the federal funds rate?
So I'd say it could, but what's happened is the economy has made all these gains in the face of during 2021, we had two major pandemic outbreaks, two variant outbreaks, and really the beginning of 21 was dominated by a very strong wave of the original COVID. So, and yet the economy, we made tremendous progress in the labor market in 2021, and growth is at a multi-decade high.
I think that's why we need more business owners.
So
honestly,
I expect the economy to continue to be able to deal with.
Not because they wouldn't do like an amazing job. I'm not saying that current politicians can't do a good job either. It's just I don't want anyone to be bought. I don't want someone to be bought
and
out of their
Omicron
perspective.
is going to go through really quickly and peak perhaps within a month and then come down after that. I think it's likely you will see
I'll end this poll.
Lower hiring and perhaps a pause in growth and that kind of thing. But it should be short-lived. It should be, and then the economy, the forecast for the rest of the year, or certainly for the next quarter or two, would be a very positive one. Very positive.
And if that happened, would that increase the likelihood of Fed action to increase the federal funds rate, or would it delay that?
If that all happens,
I think
what we're seeing
How much
is
do I
an
make?
economy
None.
that functions
I make nothing
right
on YouTube
through
currently.
these waves of COVID.
I'm not monetized.
And
I have to get
my
1,000
colleagues and I
subscribers.
see that, and
So subscribe
you
to
see
me
that
if
every
you haven't,
quarter we
because I
write
need
down
1,000
projections of
to
interest
make
rates.
money.
They're individual projections. They're not a committee plan or anything like that. But
it's not
broadly
personal.
speaking,
I don't make
all
anything,
members
so
of
my
the committee
answer's
see
not
interest rate
interesting yet.
increases coming this year. The median was 3.
But you can make a living on YouTube.
But that's going to depend
somewhat easily.
on data. It's going to depend on the progress we see on the supply side, the progress we see on
I don't think they're
inflation.
saying too much interesting, but
And we honestly don't know. There's risk on both sides.
yeah,
really, growth.
YouTubers, you can easily make a living.
And
I'm making a whole
potentially
series
inflation as well.
called,
So we're
I
gonna
don't know
have to
what it's
be,
called, but it's going to be
just
called the Middle
very
Class
attentive
Creators.
to what's happening in
And
the
that's what it is.
economy
Like, you don't,
and
basically
willing
what
to
that means is you
adapt,
don't have to be
pretty nimbly
Taylor Swift to make
our
music,
policy as we go
right?
through
You don't
the
have
year.
to be, who's the biggest person on YouTube?
Thank you, Senator Crapo.
Mr.
Senator
Beast. You don't have to be
Tester
Mr.
from
Beast to make a living on YouTube, right? You can like do it with relative ease. If you get like a 50,000 subscriber base, that's really all you need. Then you can make a living off of it.
Not your question.
Pretty easily. Pretty easily.
The intensity. First of all, Chairman Powell, I want to thank you for your willingness to serve. I appreciate your work that you've done working with the Federal Reserve Board throughout the health and economic crisis that we found ourselves in. And just to say, as many have said before me, we appreciate your steady hand. In your opening statement, you talked about climate change and cyber attacks, taking those into account as part of the things the Fed has to do. There was an interesting story.
Here's what the price is doing now. We broke the 50.
Talked about
Looking
$145
okay.
billion. that's
Again,
been
we're just
spent
kind
on
of consolidating
disasters in
more.
2021.
Nothing wild happening
December
here.
was the warmest.
Just kind of a dip
ever.
of $1 here
Last
and
year
there.
was the fourth
Nothing crazy.
warmest year in history. And I think that's a conservative number because I don't think it took in the impacts of our crops and crop insurance and things like that. I say that because I hope you will continue to gather as much information as possible about what needs to happen as this climate situation appears to be getting worse and not better as time moves on. The American taxpayer deserves that. Look, the challenges that we've had because of this pandemic, it's fair to say that the Federal Reserve has helped us get through this in a major way.
I'm not seeing any crazy
This question's been
volume
asked
spikes.
before, but I'm going to ask it again
SPY
in a
is
different
up.
way. Could you compare the economy pre-pandemic, pandemic a year ago, and today, and tell me where we're at in relation to those 3 different points in time?
Sure. So the pre-pandemic economy, that was a very long, historically long, 10 years and 8 months expansion. Growth was just modestly above potential every year. So we were getting growth between 2% and 3%, and we think potential growth is around 2%. So that implies a tightening labor market. So we had this long, relatively uninterrupted period of growth, and what happened is unemployment kept coming down and participation kept coming up. And that was very beneficial.
39.
So you saw
Dang it.
people around the edges of the labor market getting more wages. We saw companies going to prisons and recruiting people
Show
who
you the
weren't going to
volumes.
get out
I
for a
got you.
couple of years. I mean, it was a very,
Volume
it was
indicator.
a great
You go up here
labor
to
market.
indicators,
So
top left.
that's pre-pandemic. So then the
Vol.
pandemic comes and it upends everything.
There you go.
And so the question
Looks
really
like
is,
this.
how's it going to be different? And we're only beginning to see that because
Top
we're
left
not out
indicators,
of the pandemic. We're
right
a long way from
volume.
out of the pandemic potentially. But so what are some of the things
Bye,
that
going
we're
nuts.
seeing that are with us now? One of them is that
They haven't
the
said much.
recovery in labor force
Honestly, not much has been said in this meeting at
overall
all.
has been slower than hoped. Actually, prime age labor force participation.
They're talking more
moved up
history
a
than
full
they are
percentage
future,
point
which
almost
is
last
not
year. But
what I
overall,
want to
that was
hear,
offset
but that's
significantly
what's
by
happening.
older people retiring.
What are you gonna do?
Older people.
Yeah, check out
not
SPY.
older people retiring.
Going a little crazy.
So we're seeing some differences. We're going to see.
It's already
people
9 o'clock
working
though. I already
remotely.
gotta go.
There's a
Shoot.
the wage increases that we're seeing.
Oh, my video just came
are
out.
Still very skewed to the lower end of the income
Oops.
spectrum.
There we go.
So there may be something.
I got a new
happening
video out,
there
y'all.
where,
It's about digital real estate.
wages are just going to be higher for people.
I'm gonna silence this. I got a new video out. Just came out at 5 minutes ago. It's about digital real estate. If you know nothing about digital real estate, that's who it's for. If you know something about it, it's more foundational knowledge than it is getting in the weeds. So definitely check it out. I mean, it's really interesting. So it goes over everything, all the new age stuff, all the old stuff like Web 2.0 stuff, and now the Web 3.0 digital real estate. Really interesting. People are making a ton of money. It's wild. It's wild. But I do think I have to go. Sadly, I'm already over time limit here. I do have to get going. SPY is looking really interesting. I don't understand. I mean, it's really not, though, in the grand scheme, because here, again, that kind of consolidation rectangle I drew earlier, like, we're kind of still in that. Like, we're breaking above it slightly, but, like, still kind of consolidating. I don't know if we're going to break the 200 here. It'd be cool if we did, if we're just, like, super bullish. I'm all for it. But for now, I'm not seeing much. Again, nothing's been said in the meeting that's like, oh my goodness, like, like crazy stuff. So I don't know. I think just keep watching the meeting. I think it still goes on for another hour, if I'm not mistaken, or something like that. Check out what he's being said.
Inside our mandate, we have to focus on the job Congress has given us, which is maximum employment and price stability.
Yeah. I mean, he's saying good things, right? He's not saying bad things, which is really nice, right? Which is really nice. That's what we need right now. Hopefully this is the meeting, right? Hopefully that's just the meeting overall and he doesn't even say bad news and we're good. If that's the case, then we're looking solid because look at this recovery that we have, right? So this is the 4 hour and this is where the price is at right now. If we can just even touch the 200, right? That's $2. It's not amazing, but like still great growth. And then if we break that and then we have this huge gap fill, check it out. Right, we have that huge gap fill. If we can somehow get back there, which I don't know if we'll do today, but if it's all good news tomorrow with CPI data, and we gap fill, I mean that is $9. If we can get another $9 rise tomorrow or the next day, it's gonna be huge money. It's gonna be huge money. So yeah, keep an eye on that for that. Check out the 4 hour chart. That's definitely the one to use here. To see exactly when to get in, when to get out, or when to get out rather, not really when to get in, but when to get out. When to get out is this 200 for sure. When to get in, it really just depends. Again, I'm waiting on bad news, so I would wait till after the meeting just in case they're like saving the bad news till the end for some reason, which is possible. But if not, and it's all good news and we're just bullish, like, it's gonna be great. So yeah, good luck trading it. I don't have a good entry point for a blanket statement for you guys today. Yesterday was a lot easier to understand. Today it's a little more, it's more volatile because again, like this thing can drop like on a dime. Like he could just say one sentence and this thing can drop 2%, not 2%, sorry, $2, right? So like, again, like it's super testy right now when it comes to Jay Powell speaking. Just watch the meeting, make sure you're not missing anything bad, and go for that, okay? But I would love to see this bullish. Like, I don't like it when we're under the 200 at all. Like, I really don't like that. I like when our market is nice and bullish and up. So hopefully we can break above that. Maybe not today, but probably tomorrow, if possible, right? If CPI data comes in okay, then we should be able to. But yeah, I think that's all I have. I'm already over time, so I kind of have to get going, and I'm really sorry about that. I really thought the Jay Powell meeting would be like much quicker, but the first 30 minutes was like formality speeches, so it sucks. So I'm watching every day. Beautiful. Yeah. And if you guys have yet to do it, again, last plugs all around. Like the video, subscribe, because I go to live every single market open. I will be live tomorrow, of course. So you can see what's going on there. We can hopefully dive into the market and the CPI data and see exactly what the nation is doing when it comes to inflation, if it's getting better or worse. I have a feeling it's going to get worse, but we'll see. That's it for me. Is there anything else? I'm using Webull here. If you want to use the link in the description to get your own Webull account, you get 5 free stocks or something crazy like that. Free money, absolutely free money. And it is a free software, absolutely free. Free brokerage, free software. Everything is free here. It's amazing. That's it. I have a Discord in the link in the description as well. Hit the link and you can join the Discord. It's free, so you might as well just do it. You get notified every time I go live, and you see every trade I do and trades that most other people do as well, which is kind of nice. And then we can have discussions based on that after the stream, which is pretty cool. Yeah, I think that's it. Anything else? Nope, covered it. Again, watch the video. I'm going to spam it in the chat. Watch that video. Click on that. It's great. Crazy stuff. But yeah. All right, everyone. You guys have a great day ahead of you, and I will see you tomorrow. Bye.